Most investors think they have to choose dividend growth or income. But what if you could have both? Hold on to your seatbelts, folks. This is going to be a good one. A hybrid ETF strategy it blends the best of both worlds. Steady dividend paydays to keep your cash flow healthy and growth exposure to keep your portfolio compounding. So in today's video, I'm going to break down the essential ETFs that can give you balance, stability, and real long-term results. So what exactly will a balanced portfolio look like? We're starting with the backbone of this strategy, core growth ETFs. Think of them as the foundation stones, steady, reliable, and built to support everything else we're going to layer on. I've picked two ETFs that I think will nicely fill that backbone role. First off, we have to gain a little passive index exposure to the S&P 500. And the first ETF that always comes to mind for me is, yes, you guessed it, the Vanguard S&P 500 Index ETF, ticker of VFV. This one, VFV, is perfect as a core growth ETF because it gives you direct exposure to the largest, most successful companies in the US. It is simple, low cost, and fully focused on long-term growth. VFE is as steady and dependable as it gets, making them an ideal foundation for a hybrid income and growth portfolio for sure. At the time of recording, their price coming in at $159.13, and they have an NAV of $158.83. Those assets under management, $24.41 billion. When it comes to their management expense ratio, that is coming in at 0.09. That is a very nice number. Looking at their yield, you're not going to get a lot of dividends here. We get a yield of 0.98%. It is a quarterly dividend of 36.9 cents per share. Looking at their returns, and this is the important part. Their 3-year return on investment, 73.19%. Factor in the dividends, total return 77.86%. On their 1-year return on investment, that's coming in at 18.69%. Adding in the dividends, we do get a total return of 19.83%. That was a great addition, but we're not done. There is another ETF that I think needs to be included as part of that backbone, and this is an ETF that, in addition to giving us dependable growth, it also adds in a whole bunch of diversification. We're talking about the iShares Core Equity ETF portfolio. Yep, ticker XEQT. This is a great choice. If you want your core growth ETF to go beyond the US, it's an all-equity portfolio that spreads your money across Canada, the US, and international markets, giving you very instant global diversification in a single fund. I really like this one. At the time of recording, their price coming in at $37.50, and they have an NAV of $34.47. Those assets under management, $8.80 billion, and their management expense ratio, a little higher than VFB, is coming in at 0.20%. Their yield, also higher than VFB, coming in at 2.86%, quarterly dividend of 26.7 cents per share. Just to point out, their next dividend will be closer to 9 cents, as they have a dividend cycle that has most of their dividend payments skewing to every second dividend payout. So 9 cents, 26 cents, 9 cents, 26 cents. It's odd, but it works. Looking at that 3-year return on investment, 60.26%. And adding in the dividends, total return 68.20% on that 1 year. Return on investment 18.63%. Factoring in the dividends, total return 20.93%. So those are my two picks for our backbone of this portfolio. There are definitely many other ETFs out there that could easily have filled this role. And in fact, I'm pretty sure I'm going to see many of them in the comments. A sub to the channel is the best backbone for future content. Okay, we've built our backbone with core growth ETFs. Now it's time. It's definitely time to add some truly hybrid ETFs that give us, the best of both worlds, income and growth. For these picks, I'm looking for, well, both growth and some half decent dividends at the same time. Of course, if I can find some bigger dividends with solid growth, all the better. Keeping that in mind, my first pick for a hybrid ETF is the Canadian Covered Call ETF. You may not recognize that name because they recently changed it, but this is HDIV. HDIV is, well, it's a great hybrid option because it combines multiple covered call ETFs into one diversified package. You get exposure to Canadian blue chip sectors like banks, utilities, and pipelines, all areas known for both steady dividends and long term growth. In addition to that, the covered call overlay boosts the yield, giving you strong income today, while the underlying companies provide the growth potential to keep your portfolio, well, to keep it compounding over time. So at the time of recording, their price coming in at $19.07 and their NAV $19.02. Their assets under management 794.5 million. Now, their management expense ratio, oh boy, it's higher, 2.39%. Of course, these are no longer passive index ETFs. We're talking about management teams that are now doing a little bit of work to make you money. Of course, that work translates into this yield, 11.41%. That's a monthly dividend of 17.3 cents per share. Let's look at them returns. We got 3-year return on investment, 27.99%. Factor in the dividends, total return. Boy, this is a nice number, 64.93% on that 1-year return on investment, 13.44%. Adding in the dividends, total return, 25.70%. Not a bad first choice for a hybrid, that's for sure. Okay, for my second pick, I think I'm going to stay with Hamilton. That means, you guys probably are guessing it, I am choosing the Hamilton Enhanced US Covered Call ETF, ticker HYLD. HYLD, this is Hamilton's US Covered Call ETF, and it's designed to deliver both income and growth. It holds a pretty good portfolio of US equity ETF covering sectors like, well, tech, healthcare, and financials, and then layers in, once again, those covered calls to generate a very high monthly yield. It is more income tilted than some other hybrids, but for investors looking to balance some cash flow with exposure to US growth, HYLD is absolutely a powerful option. Looking at their price at the time of recording, that's coming in at $14.07, and they have an NAV of $14.06. Those assets under management, 937.90 million. Oh boy, I can't wait to see them hit that $1 billion mark. Their management expense ratio, another one, the rest of these are all going to be high, 2.37%. Looking at their dividends, they have a yield of 12.90%. It is a monthly dividend of 14.7 cents per share. On their 3-year return on investment, that's coming in at 17.35%. Adding in the dividends, a pretty healthy total return of 58.06%. On their 1-year, that return on investment, 3.84%. After we factor in the dividends, we're getting a total return of 16.61%. So far, we've built a strong backbone with core growth ETFs and added true hybrids that balance dividends with long-term appreciation. Now, now it's time to round out the strategy with some pretty pure income ETFs. These funds tilt heavily towards yield, focusing less on growth and more on generating reliable monthly cash flow. Perfect for covering expenses or reinvesting back into your portfolio. There are so many good ETFs out there that produce a lot of great income, but I do think I have the perfect pair that ties very well into the theme we have going here with this portfolio. Our first income choice is, well, the Harvest Diversified High Income Shares ETF, ticker of HHIS. HHIS, it is built to maximize yield while still spreading your money across several sectors, though it is technology heavy. And the volatility of that sector may actually, well, that may actually be a blessing when it comes to covered calls. Nonetheless, this ETF has a high monthly distribution from a diversified base of growth-oriented companies making HHIS an excellent choice, a very excellent choice for investors who want reliable income without putting all of their eggs in one sector basket. At the time of recording, their price is coming in at $12.90, and they have an NAV of $12.87. Those assets under management, 790.91 million, and they have a management fee of 0.40%. We do not yet, this is still relatively new, we do not yet have a management expense ratio for this one. Looking at their dividend, and this is where we start to see some big numbers, they've got a yield of 23.29%. That's a monthly dividend of 25 cents per share. As I said, they have not been around for long, so we do not have a 3-year. We have a 1-year. So on their 1-year return on investment, that's coming in at 4.45%. Factor in the dividends, total return 18.62%. All right, I still have one more income ETF, and this one is a spanking brand new one. You know I'm excited about. It's the Harvest Canadian High Income Shares ETF. So this one, HHIC. HHIC launched in August of 2025, which we're still in at the time of recording. And it does bring a fresh domestic twist to our hybrid strategy. It holds a diversified basket of top TSX listed companies across key sectors, and then it layers on an active covered call strategy, plus a little bit of leverage here, a modest 25% leverage to drive strong monthly income alongside some growth potential. At the time of recording, their price was coming in at $12.42, and they have an NAV of $12.32. Their assets under management coming in pretty small. It's a brand new ETF. It's going to take time to build that up. 11.18 million, and their management fee is sitting at 0.40%. Once again, we do not have a management expense ratio on this one. It's going to be a while. It'll be at least a year, if not more, before we have that. Okay, let's switch to their dividend. So they do have a yield of 15.56%, monthly dividend of 16 cents per share. Not too shabby. Definitely not too shabby. I like to say what do we have return-wise? Well, in a couple of weeks, we have 3.5% as a return on investment since they launched. We're looking at, if we add in their first dividend, that will give us a total return of 4.83%. This number is going to get big fast. So have a little patience. It's good. I think it'll be worth it. Let me tell you, that's quite the spread, and it's an excellent start to building a powerful hybrid portfolio. But I still want to hear from you. Drop your top picks down in the comments, because I would really love to see the strategies that you guys are building. If you are interested in any of these ETFs we looked at today, don't forget to put in a whole heaping helping of due diligence before you place any of your hard-earned money on the table. Let's continue that learning journey. Check out this video on S&P 500 ETFs. Thank you for watching, and I will see you in the next video.